Hi, I'm Michelle Smart. I'm an enrolled agent trying to keep you updated on the latest on the employee retention tax credit. Well, now the audits are starting to happen, and I just want to show you what to expect and what to do if you get an audit letter. Now, I will take you through quickly through one of the letters that one of our subscribers was kind enough to share with me, and then I'll go into more detail as to what you need to do. Right, so I'm sharing with you the letter that was received by the IRS. Remember, in most of these letters that they are going to give you a time limit to respond, so it's very important that you do so. And also that I would advise working with a tax professional. So this is going the tax period. This is third quarter 2021, which is going to be the common quarter as we've previously discussed. And here's a due date. They've got 30 days from the date of the letter, a little more, to respond. So this is the 941X. We're auditing your 941X for the periods listed above. We need you to send us information to support the employee retention credit that you reported on your returns for the tax periods listed above. What you need to do immediately is review the enclosed form 4564, which lists the supporting information you need to send us and the questions you must answer. So address to send it. Okay, allow us 30 days to respond. All right, that's pretty straightforward. Yada, yada. Okay, here's the form. This is the audit form. And I want you to see the amount of documents. Let's not hurt the small businesses, right? Okay, so this is the form 4564, information that they are requesting. Answer all of the questions. If it doesn't apply, put NA, non-applicable. All right. Provide the summary of your trade or business, the primary purpose of your trade or business that generates income. 2, document that you are eligible to claim the ERC for whichever of the following is applicable. Operations were suspended or partially suspended. We'll go into more detail later. Documentation that you experienced a decline in gross receipts, or document that you're a recovery startup business. Those are the only 3 options: decline in gross receipts, the recovery startup business, or partial suspension. Copies of the worksheets you use to compute the ERC. A list of employees to whom you paid wages, the date you paid the wages, and the total wages you paid to each employee for which you claimed the ERC. If you are part of an aggregated group, identify any employees who are employed by more than one entity within the aggregated group. We're referring back to the aggregation rules for the ERC. If you're claiming ERC for wages that were paid to employees who are related to your majority owners, identify them and explain their relationships. If you averaged more than 100 full-time employees in 2019 and you are claiming the ERC for 2020, provide documentation to show you're claiming the ERC only for wages you paid to employees who were not performing services. This was one of the rules. We'll go into that later. 7, if you averaged more than 500 full-time employees in 2019 and are claiming the ERC for 2021, show that you're only claiming wages for employees who are not performing services. This is according to some of the rules regarding the number of employees. 8, copies of income tax returns, employment tax returns, Forms W-2 for all entities in the aggregated group for all applicable tax years periods. If the taxpayer is a member of an aggregated group. Again, referring back to the aggregation rules. A copy of your amended income tax return showing you reduced the amount of your claimed wage expense by the amount of your ERC. 10, documentation showing how you determined the amount of qualified health plan expenses that you used to claim the ERC, if applicable. 11, applications for the PPP loan forgiveness, SBA Form 3508, if applicable. Copy of your PPP loan forgiveness letter. 13, provide the PPP coverage information below if applicable. If while preparing you determine you're not entitled to the ERC claim, let us know you want to withdraw your claim and we will provide you with specific instructions. And this all is the tax examiner. Okay, so that's quite a lot of information. Now let's go into some of the detail. Let me explain some of these things if you are not familiar with it. A summary of your trade of business, the purpose of your trade or business that generates income. How is this going to be used? Well, if you have a business that was partially suspended, that's going to kind of play into how that works. So documentation that you're eligible. Okay, again, there's only 3 ways that you can be eligible. And one is due to partial suspension. Very difficult for third quarter of 2021. I'm not saying it's impossible. I have not looked at the rules and laws for every single state and every single county and city. I would say if you're filling out this form, refer back to my video on how to qualify by partial suspension. You should have done this already. You should know how you qualify. Now, some people have said to me, I don't know how I qualified. That's a bit of a problem. You should know how you qualified. So partial suspension in third quarter 2021, that's going to be a tough one to do, but you've got to get all of the orders and show how it affected your business in that quarter. And they're not just asking for the order. If you can get them for third quarter 2021, an explanation how that affected your business. And again, it's got to be at least a 10% suspension. So I would write that very well, and I'm very careful about how I respond to these. Again, remember, in an audit, we only want to respond within the scope of what's being asked. So don't give more information than you need, but also I wouldn't be quoting anything like supply chain issues. This is thrown out. You can't use it. So make sure that whatever you're using is solid, explain it well, and tie it together. I've discussed this partial suspension in other videos. It's a very extensive explanation, so I would just say go back to that. Okay, the other way you could qualify is due to a decline in gross receipts. So there are a number of partial. What you have to do is look at your quarter by quarter in 2019, and for 2020, in the same quarter, you had to have a 50% reduction in gross receipts. If you qualified, let's say you qualified by a 50% reduction, third quarter of 2020, then you automatically qualify for fourth quarter 2020. You get to use the quarter afterwards as well. And then for 2021, compared to 2019, you have to have a 20% reduction in gross receipts. There are alternative quarters as well. You can use the previous quarter in 2021 for a reduction in gross receipts of 20%. Also, there are some other alternative quarters as well that you can use. Okay, C, documentation that you are a recovery startup business during the calendar quarter for which you claimed ERC if applicable. So you have to prove that you were carrying on a trade or business after February 15th, 2020, and provide information to support that your average gross receipts doesn't exceed $1 million for the required 3 taxable year period relating to the calendar quarter you're claiming the credit. Recovery business is pretty straightforward. Remember, you can only claim $50,000 per quarter as the recovery startup business, and this is the only one that you noted on the 941X how you qualified. I believe it's 31B. You check a box on the 941X saying you're a recovery startup business and the refund is limited to $50,000 per quarter. So that should already be on your form 941X. So there's only those three qualifiers. You do not have a combination of qualifiers. So you don't have like I qualified partially by partial suspension and partially by reduction in gross receipts. Now the rules are very straightforward. It's one or the other. So you have three options: recovery startup, gross receipts reductions, or partial suspension. And again, third quarter 2021, I'm not saying it's impossible, but you would have to have laws that went into third quarter. There were not too many, and it has to have affected your business. Okay, copies of worksheets. My worksheets showed the gross amount each employee got, and carry forward in 2020. In the year 2020, you had to have total wages per employee could only be $10,000, including health insurance. So you've got to prove that you did not take more. The credit would be 50% or $5,000 per employee. I put it in there, the employee name, the amount, how much credit they got, and so forth. List of employees to you paid the wages. So hopefully you have a detailed spreadsheet showing all of this. Now, the aggregation rules, this is a big part of it. Identify employees who were employed by more than one entity in an aggregated group. Documentation that demonstrates you did not claim the ERC on wages, which may not be included in qualified wages. And that now we're bringing up the PPP. So PPP wages are not eligible for ERC. You could not double dip. So these should have been deducted out on your spreadsheet. There are limitations per employee to how much of the PPP wages could be applied to each employee. I'm very careful to use it in the most advantageous way that you can to take all of the PPP wages. You've got to look at the 3508 where you asked for forgiveness of that debt. If you put everything to wages, then you've got to use that in your calculations and show those wages deducted out. What I tended to do was PPP wages can be owner wages. So I would try to really heavily favor PPP wages to be the wages that could not be used for ERC. So this is the way you look at those. Hopefully you've done these calculations already and it's just easy to pull them out. Okay. You can't double dip with the shuttered venue program. You've got to deduct that out. You can't double dip on where you got the related paid sick and family leave wages. These were all on the schedules. So you have a 941X and there were schedules 1, 2, 3, 4, and you should have deducted out those wages which were already used for the paid and sick leave. You may not have done that at all, and you'll see that if you had a payroll processing service. You can look and see on those schedules. Also, I believe on the 941, it was line 11. Don't quote me on that. But you can also see in the boxes on section 5 of the 941, where it shows the different wages. It should show sick and family leave wages. A lot of people didn't use it because it was so confusing. Okay. The majority owners, all these rules are very detailed rules. If you had someone who was on payroll who was over 50% shareholder, their wages cannot be used for ERC, so they have to be identified. The IRS wants them identified that you did not use them for ERC wages. Also, the relatives of those owners, their wages cannot be used. So hopefully you did your spreadsheet right. Mine are all highlighted and not used. I could use them for PPP, but I couldn't for PPP forgiveness. I could use them, but not for the ERC. Okay, now we're getting into the limitations. Number 6, if you average more than 100 full-time employees in 2019. So the ERC was limited For the year 2020, they're looking back at the number of full-time employees, and there's no part-time equivalents, it's just full-time employees that you had in 2019. That's what you're using to qualify in 2020. And you could not have over 100 full-time employees unless you only used the wages that you paid for people who didn't work. So if you kept paying for somebody who didn't work, you could use those wages only if your employees exceeded 100 full-time employees in 2019. Now that same thing changes for the year 2021. They increased it for 500 full-time employees that you could have and qualify for the ERC. If you had more than 500 full-time employees, then you could only use for ERC the employees who were paid who did not work. Copies of your income tax returns. So your 941Xs, your W-2s for all entities in the aggregated group. This is quite an issue because I have clients who had maybe 6, 7 different companies, and I had to calculate how much ownership they had in each company. What's included in the aggregated companies? It's a whole rule. I'm actually pretty surprised of the extent of these things that they are asking for, because they're going into this aggregation, and that is a lot. Okay, a copy of your amended tax return showing that you reduced the amount of claimed wage expense by the amount of ERC. Now, I have a lot of people who are like, I don't know if I was going to get it at all, so I didn't amend my return. I agree with that. And then the people who still haven't gotten it, and then there's a new instruction, but not technically a law, advice of the IRS to claim the ERC in the year that you got the refund, which is now their current instruction. So if you're doing this audit, you may or may have not gotten the ERC refund yet. But if you got the ERC refund, they certainly want to see that you amended one of these tax returns. Documentation showing how you determine the amount of qualified health plan expenses. Remember, health plan expenses are used as wages if it's paid for by the company, only the company portion. Then we have 11, application for PPP loan forgiveness. This is where it shows that how you asked for forgiveness, and you were allowed to use 60% towards wages and the rest towards other allowable expenses such as lease and rental payments and utilities. Most people used 100% wages. This is referring back to how PPP was, how much of the PPP wages were actual wages and are disallowed from the ERC. Remember, you cannot double dip on this. You should have, if you did this right, spreadsheets. I know some of the payroll services were doing this, and they had spreadsheets that you had to fill out, such as ADP and paychecks. They were having you fill out spreadsheets, only allowing the appropriate percentage per employee and so forth, and having you take out the PPP loan. So they want to see that, to see how you applied for the forgiveness for that reason. How much was wages, how much was lease. Provide the PPP coverage period. Again, the wages that were used for PPP cannot be used for ERC refund. And so there was a period that was listed on that PPP forgiveness forms, whether you used the, I believe it was 8-week, or you used the 6-month period. They want to see those wages disallowed in your spreadsheets for the PPP covered period. So that is that's a huge amount of documentation. Remember that if you get audited, stay within the scope of what they've asked, and not to add anything else. You can see when we're getting into the aggregation here, this could be problematic because you're pulling in other companies that are not under audit, but because they are aggregated, and that means that the same majority owner owned several companies and you had to aggregate those companies. There's specific aggregation rules. So that's a lot to process, and I would strongly suggest having a tax professional help you with this, and also be an interface between you and the IRS. So if they ask you something that you don't want to answer directly. It's going to be instead a tax professional who's more aware of what they should be saying to the IRS. So if anybody else has received this request, this audit information, if you could make some note below or give us some comments on what's going on with you, because you are really one of our greatest sources of information. Again, thanks again for watching. This is Michelle Smart. I'm an enrolled agent. Please like and subscribe so that more people who are looking for this content can find this channel. Thanks for watching.